Hello, everybody. Have you heard that Dow Jones hit 40,000 um, points this morning? Well, that's a big deal. I remember when I first started working, in the year 2000, Dow Jones had just hit 10,000, and everybody was happy, and everybody was cheering and saying Dow Jones hit 10,000. And today, Dow Jones hit 40,000, which is amazing for those that have their money in the stock market. For those that don't have their money in the stock market, well, it may not be as exciting of a news, because if you're going to put your money in the stock market, then you're paying a lot for those stocks. So, but what does that have to do with the housing market? My name is Roxanne Govari, and I'm a broker in San Diego, California. And I've been in the business for about 25 years. And my favorite thing to do is to follow the housing market, follow the economy, follow the stock market, and also figure out what's the difference, what's the connection between them, and through those comparisons, try to figure out through my crystal ball, which does not exist, what's going to happen to the housing market. Well, one thing that I hear by the economists, by the ones that are in the industry, in not in the housing industry, but in the stock industry, in the financial industry, is that okay? The stocks are doing really, really well, but if you look at where things are in the world and where things are in the US, there's a lot of unknown that is going on right now, and that unknown might translate into putting your money in the stock market right now may be a risky thing. So is it the best thing to do to actually put your money in the stock market, and then and at its highest level, and then watch it go away if things fall apart? Well, that is obviously the decision for the investor. That's the decision for you if you're investing your money in the financial industry, in the stock market, or but if you think about it, what's the difference between putting the money in the stock market versus pulling the money out at such a high level and putting it into real estate? And yes, interest rates are very high right now. And you may think, okay, buying real estate at this point is very, very pricey. And that is true, because interest rates are above 7%. So if you're getting into the real estate market, your cost is going to be very, very high. But if you're selling stock at 40,000 points that Dow Jones is in, then you're actually making money, and transferring that money into real estate at 7% may be costly, but then you have a tangible asset that you are putting your money into, and that tangible asset is not going to fly by when stock market crashes, or when the stock market comes down. It's not going to disappear like stocks do. The value of real estate is not going to disappear like stocks do, because real estate is a tangible asset that you can either touch, or worst case scenario, you can move into it and live in it. So that's the difference in terms of the value between the two assets. And better yet, if the interest rates come down, then at that point you can refinance and bring down your costs, and you still have that tangible asset right in your fingertips. Okay, so that's as much as I wanted to give in terms of advice, in terms of would it be better to keep your money in the stock market, or would it be to cash out and put your money into real estate? That being said, you may be at a point where you're tired of managing property, and it may be actually better to cash out and put it into the stock market. And if it's going up like it is, and if it's if 25 years ago when I first started in this business, it was at 10,000 and now it's at 40,000, obviously it appreciates just as much as real estate does. So if you don't want to deal with headaches and tenants and trash and toilet, as they call it, then maybe it's time for you to sell that investment property and put your money into the stock market. So let's get into the numbers. Let's get into the numbers and see where we're at. So Pemberley Realty, whom I am a broker of, we have two offices, one in University Heights / North Park and one in Del Mar in North County, San Diego. So I like to go over the numbers in those two zip codes because that way I'm in the know about how those local markets do, and then I can also bring it to you and let you know how those local markets do. So let's take a look at those markets and see how they are doing. So let me share my screen and show you what we have going on. So let's start with 92116, which is the zip code where our North Park office is in. And that market consists of the neighborhoods Kensington, University Heights, North Park, and Normal Heights. So we are always comparing the year before to the year present. So new listings, as you can see, from 2023 to 2024, it looks like the inventory is definitely increasing. Pending sales is decreasing because this year we seem to have a much slower market, and a market is actually not as strong as it was last year. So and that reflects in the numbers. As you can see, the median prices are down about 4%, which is interesting to see because even though the median sales prices are down, they're only down by about 4% from April of last year to April of this year. But if you think about it, inflation is actually going up at the rate of 8 to 10%. So if you think about it, market has come down by 4%, inflation has gone up by 10%. So the overall prices, you can actually say that the overall prices have gone up, and this is basically the determinant factor that median sales price in the zip code of 92116 last year by about this time was about 1.2, and this year is about 1.272, which, if you think about it, and if you consider inflation to be at 10%, prices have gone down by 4%, but overall they have gone up by 6%, and that is the inflation factor that you see in the price of the homes. And this makes perfect sense in terms of single family homes and their prices. In terms of condos, you can actually see that since last year we're slightly down, and this is the chart. Now 92116 seems to perform, as you can see here. If you're looking at single family homes, 92116 seems to be doing better than the average of the other zip codes in San Diego versus townhomes and condos. 92116 seems to actually do not as good as the entire county of San Diego, but that's just because we have a lot smaller condos in this zip code than if you compare it to the county or county-wide. Let's compare that to Hillcrest, actually. So as you can see, the median sales price in 92103, which consists of Hillcrest in Mission Hills, is actually down. So single family home in Mission Hills has actually gone down in price, and because the prices are higher, versus their condos, the prices have gone up because, the lower the price point, the more fluctuation, but the more affordable also. So if they're lower price the condos, then they're going to still be able to appreciate, versus the houses that are higher in price are going to depreciate if there's not as much sales happening, if the market has slowed down since last year. And that's reflected in these numbers. And it also is interesting to compare median sales prices. So 92116, the average home is about 1.272, versus Hillcrest, the price is 1.481. So that is definitely a more affluent zip code. Let's look at Del Mar, which is another zip code where our North County office is located in. And as you can see, median sales price in Del Mar in April was at 3.35, and median sales price this year has actually gone up, and that seems to continue even year to date. That median sales price being at 2.5 this year is about 2.7, and it's gone up by about 4.9%, which is basically the cost. The difference is inflation, basically. So you could argue that the prices are flat because, if they've gone up by about 5%, and that's the rate of inflation, then the prices have remained flat. And while the inventory actually is almost the same as last year as well. So, and then if you're looking at condos seem to be doing exactly the same as single family homes, appreciating by about 5%, which would mean that they remain flat. But the average price is very interesting. If you can see, the median price of a condo in Del Mar is 1.6 versus 796 in Hillcrest and Mission Hills versus $500,000 in 92116. So that is a big difference. Now let's go and compare that to Carmel Valley, which is the neighboring city to Del Mar. It's further east, so you tend to not be as expensive as you move away from the coast. But let's compare those numbers to Del Mar. So now Carmel Valley, it's interesting that actually Carmel Valley homes have appreciated by about 21%. So if you consider 10% of that has been inflation, then you still have about 10% appreciation, which basically has pushed the prices up from 2.1 to 2.55 in Carmel Valley. And then that almost the same number is going on in the condo market, and where the median price of a condo is at 1.8. Now, if you compare that to Del Mar, median sale price of a condo in Del Mar is at 1.6 versus $1,080,000 in Carmel Valley. So Del Mar is still pricier. Let's see. Now, if you're comparing homes, it's almost the same. Del Mar is still pricier, but you can see more appreciation in Carmel Valley because overall Carmel Valley is more affordable than Del Mar is, and price per square foot in Carmel Valley is lower than Del Mar. So there you have it. Those are the numbers, and so thank you so much for joining me to view these numbers. And if you are thinking of buying or selling in San Diego, I am happy to help you. Here is my phone number and also my email address. Or if you like to visit me on the website, I also like to hang out on Instagram or on Facebook. So please reach out to me if you have any questions. And if you're thinking absolutely of buying or selling anywhere in the U.S., I am happy to help you. And I wish you a happy and beautiful evening. Thank you so much for joining me. And if you are watching this on YouTube, I appreciate it if you give me a thumbs up and subscribe to my channel so that you are able to see these videos that I do put together on a weekly basis. Have a great evening.